can't hear me. Okay, thank you for recording it. I'm going to, why can't you hear me? Let me see. But everyone can hear me loud and clear, right? Please, if you cannot hear me, can you type on the chat box? Because his speaker is connected. Can you all hear me? If you can hear me, type yes, so we can continue. It's kind of low. Okay, can you hear me now? Okay, it's better now. Okay. I think I was far from the speaker, from my speaker. Okay, beautiful. Good. All right. Thank you for that. Now, even if you, like I was saying, even if you know all the strategies, if you're not disciplined, you can never make money in this market. So I want you to get that. It took me 2 weeks to master this strategy, but I've actually been doing it since January. Looking for how we could, you know, one thing about trading is your risks. If I lose a trade, am I going to lose all my capital? If I win a trade, am I going to gain more than what I will lose, even if I lose 5 times? That is trading. And with this strategy, there's a tendency that you might hit your stop loss maybe 2 or 3 times. But by the time it hits your take profits, it will cover up times 10 of the stop losses that it has been hitting. That was why I tried it with volatility, which is very volatile. I can even share my screen. You can see volatility here. See what's happening here. Look at it. How price is expecting it. And I tried it with gold because of these are the things I know that move very, very fast. So now this is GPP JPY. I'm going to start from this point here. Let me use my trade line. This is where I'm picking. This impulse move. This particular one from here to here. This one has already happened. So price is on the top here. So let's work with this one. In case price is coming down or price is going up, we'll see how to do it. This is the first thing you should do. Identify your impulse move. Then pick your rectangular box and draw from here up to that place. Now, what is the next thing to do? Your horizontal line and identify your what? Support zone. Identify your resistance zone. This is all you need for the first part. You pick your trend line and you draw on the other corner of the rectangular box. Why am I doing that? I want to identify my pivot level. I pick my horizontal line. The intersection between the two trend line is my number one intersection. So I've gotten it, the first one. Now the box is divided into 2. This is the first box here, and this is the first box here. I'm going to pick my trend line and I'll repeat the same thing for the first box. I'm going to just do for the first box because price is actually above. If price comes down, we'll do the same thing. Now, what is the essence for this strategy, QOPFX strategy? Or what's the essence of me drawing my rectangle? Rectangle tells you what is going to happen in the future. That's why you work with the impulse move in the past. Price will always go back to retest where it has always tested before. Now I have 2 intersections here and here. I'll pick my horizontal line and do this. And I'll pick my horizontal line, I'll do this again. In between the intersection. This is all you need, that's all. Even if you don't draw this box, except price goes above this trend line here. Let me change this to red. And I'll change the below one to, let me change this to red. As a resistance, let me change this to blue as a support line. Before you can duplicate this box and paste it on top here, let me show you something like this. You come here and you clone the box. Let me reduce this. And you do something like this. That is in an occasion where price did what? Price has gone above the previous what? Resistance line. Now making that place what? You do something like this. If price decides to go do what? Go above this, above a resistance line. You know, this resistance will now become the new support. But until price does that, we'll work with what we are seeing here, which is just this particular place where price is at the moment. Now I have gotten my zones. Let me just complete the lower part itself. I'll do the same thing to the next box down here. I'll do the same thing here. Pick your horizontal line, identify it, you know, because I changed it to this, that's why it's still blue. All right, so this is on 30 minutes. And like we know, we're using what? 1 EMA, which is what? The 200 EMA, exponential moving average. Like I told you, you draw it on the 30 minutes, then you go to 5 minutes and you do what? You enter and exit on the 5 minutes. Let me reset this chart. Beautiful. Now let me show you in a case where let me delete this box above here so it won't distract us. In a case where this particular strategy will hit your stop loss, is this one that you're seeing here now. Let me show you before I get back to this. You see the strategy is what? You wait for price to go or break above or below your what? Your pivot level, which is these red lines in between. Now you can see here now, this price now broke above this. The strategy is that the first 5 minutes candle that will break above the pivot level indicates that, okay, there's a buy what? Signal. But you wait for the next one to break. Like this one now broke. I'm sorry, closed above the pivot level. As soon as it closes, you enter your buy execution. And your stop loss will be below the one that broke the pivot level. Now, look at what happened. Price did not go above. It came down. It will hit you on your stop loss. But now, let me shock you. Your entry is here. 145.4. Let me say because of spread. 145.500. And your stop loss is what? 145.429. That is how many pips? 500 minus 42. That's about 8 pips. If this trade could go your way, your next stop loss and take profit will be the next pivot level on that box I'm going to draw above. But because this did not go our way, it will hit your stop loss, and what you're going to lose is only 8 pips. Now let's go and see an occasion where it did not hit the stop loss and it went to the take profits. Remember, the work of this 200 EMA is to show you the trend. If price is above the 200 EMA, it's telling me that price is still going up, up, up. It's going above. It's going bullish. But if price is below, it's an indication that it's going bearish. So now let's go to a place where we can see how price reacted to one of our pivot level. And it reacted perfectly. You know, because this is 5 minutes. I don't want to reset this chart too much and I won't be able to see. I'm sure everyone is following me now. Good, something of this nature. We'll do the past. Let me squeeze this. Okay, let me do something of this nature. Let me see this place. Let me zoom out here. Okay. Now, what this strategy is, it tells you, you wait for price to break. Like now, if you want to buy this particular trade, you wait for price to break and close above your pivot level, just like what you're seeing here, this pin bar. You know, this is a 5 minutes time frame. So this price will close above this. You will enter the trade. You wait for the next 5 minutes candle to do what? Close. Now, this next 5 minutes candle closed above the pivot level. You will do your instant execution as soon as it closes. So your price will be somewhere here, 142.952. And your stop loss will be the candle that broke it below it, which is 142.866. So it's less than what? 15 pips. But where is your take profit going to be? On the next pivot level, which is this one, 143.736. So imagine less than 15 pips and you are getting over how many pips? Let me calculate it. You know, we're entering from here. This is 77 pips. If you can do 77 pips in a day with 0.01, that is $7.07. With 0.1, that is $77. With one standard, that is $770. With 10, that's about $7,700. And what you are risking is just less than 15 pips. So that's the beauty of this strategy. All you need to do is just wait. Even if it's, yes, this one is going to make you to be looking at your what? At your laptop, to wait for a position, to wait for this candle to close, because it's not like the previous one I taught you, which is 4 hours. You know, you have to wait for 2 good 4 hours candle to close. That is 8 hours. Not everybody have the patience to do that. Now, this is the best that you can ever see. Okay, now this is the past. I've showed you what's going to happen in the past, which is what we've seen. Now, my analysis on this pair, I'll cancel this. I'll go to the present. So you see why this is beautiful. And it's easy for everybody. And the more indication that tells you, for the fact that you see that price is still above your what? Your 200 EMA, is good for me to keep buying. What I told you the last time, for instance, you decide to sell this pair. I'll look for a sell opportunity and tell you where to hit your profit in case the price is still above the 200 EMA. And this is the one that's happening here, just like what we're seeing here now. This is a good example. Let me reset this chart. Now, this place indicated that price came back here and closed below. If we took this trade on Friday, you know, would have entered this trade somewhere around here, 145,426. And our stop loss would be on this candle here, 145,460. That is how many? Maybe less than 5 pips. And you can see that by the time you are coming down, price has not even got into your, let's say you entered around here. See where price is. You've done 7 pips already. If you want to take this pair, let's say on Friday, your take profit will be at the tip of this 200 EMA, because price is above the 200 EMA, which is an indication that price is still going to do what? Go up. But because of you are obeying the rules of this strategy, that okay, yes, I want to sell this pair because it is giving me a sell indication. Your stop loss now, or your take profit, sorry, rather, will not be on the next pivot level. You might enter the trade 2 times. You might not put it here. Let your trade, your first TP be here, and your second TP, you can put it here if you choose to. Because before price can get to this place, it needs to break this 200 EMA and start dropping. So because we don't know even whether price will get on at this, just like what happened here. See how price kissed it, went up, came here, closed above it, went up, came here, did the same thing before it came up. It might come and do the same thing here and decide to go up. So my analysis for this pair is simple. As soon as markets open, this is what will happen. You see that price will continue going up and break above this like this and keep going up. Or price will gap, because this is a 5 minutes candle, gap directly down to this 200 EMA and be rejected to go up. If it doesn't reject, for you to have full confidence to sell this pair, it should be below this 200 EMA. But for the fact that market will open, what I'm expecting is price to drop. There will be a gap in the market down to this place before it can keep going up. If it breaks it, it will do what? Come down. If price breaks this 200 EMA, what is going to happen is price will do what? Come down here. But until then, what I'm seeing on this pair is still what? A bullish move. It's still going up. But before it goes up like that, market makers might do what? Decide to drop it a bit. But if price closes above this pivot level, wait for the next. If it closes above it, wait for the next one to close, then you buy. You do what I asked you to do, duplicate this thing, place it on top, draw your what? Your trend line and your rectangle and your horizontal line. Your next profit to be on the pivot level. That's how simple it is. You don't need too much analysis. All you need to do is just take your time to draw your box. The beauty of this thing is the risk to reward ratio. The risk to reward ratio is very good. So even if you have a $100 account, $500 account, you can trade with peace of mind without having to lose so much, not over leveraging your account or taking so much risks because you want to catch how many pips. If you understand what I did on this GPP JPY, please type 3 on the chat box so I can move to the next chart. If you understand it, type 3 on the chat box. Okay. So my analysis for this is I am still bullish. Let me type it here. GPP JPY is still bullish, but I'm expecting price to close above the pivot level before I can buy comfortably. But if it drops to my 200 EMA, I can still buy it up. Before I can sell it, it needs to close above the 200 EMA for more confirmation. Based on this strategy, is dropping to what? But because price is above our 200 EMA, you need to be what? You know, when you are trading, you need to also add psychology to it too. You don't just trade like that. The 200 EMA has its own part to play to show you where the market is moving. As it is now, the market is going up. So you need to respect the fact that it's still going up. Even if it closes, you saw that price close below the pivot. If you want to take this one, always remember that your take profit one should not be anything above your 200. Below your 200, it should be above it here. Then the next one, in case price hits it and close, you secure your profit and wait for the next one. Because by the time price closes below this 200 EMA, it will tell me that, okay, yes, this drop, this bearish movement is now valid. So GPP, JPY, still, or let me say, buy limits. One, 4, 1, 4, 5, 150, 150. Good. Great idea. Or let me do it this way. Based on this strategy, let's allow the price. Let's do it this way. Based on the strategy we're teaching, because if you're looking at this, we're expecting price to do what? Keep dropping. So before you can buy this pair, you have to wait for this thing to happen here. Price will go up here, close above my pivot level, then you buy it. But if it's not doing it, you continue your sell what? Downwards. So let's see what the market is going to react as soon as market open. If there's a drop to this place, let me use my diagram. If there's a drop to this place and market hold it, you can do what? Buy it. If market doesn't, you sell it to the next pivot level. But for this sale, let's leave it this way and see what market does. Because Sundays are, Sundays there's so much gap. As soon as the market open by 11 o'clock, you see the wide spread. I don't expect you to enter the market immediately because there'll be so much gaps in the market. So wait and see how price reacts to this. If this sell is going to continue coming down, or it will go above it and we'll do what? Continue buying. So GBP, JPY, no trade idea for this one. We're going to wait for further confirmation. So wait for further confirmation. That is for this. Now Euro USD. Euro USD. What's happening here? This is a beautiful, beautiful one. So I'm going to pick. Which one am I going to pick? This is very long. Let's pick this to this. Let's pick this impulse here. You can choose, you can decide to do this, but let's do this one. This impulse move here. Because this way price has not gotten up here, price has not gotten down here. So we can use this. But by the time you take this thing on the smaller time frame, it will be very, very wide. So it will not be giving us difficulty just like we did with what's it called? GJ. This strategy will help build your confidence very fast. Okay, this is our support. This is our resistance. Let's draw the next trend line. Okay. My chart is blinking. Let me check. Okay, you see someone said her confidence has increased. That is the main thing. You just need confidence to trade. As soon as you can take fear away from trading, you become a millionaire, not in Naira, in dollars. Take away fear. That's why I always tell people, practice. Build your confidence in demo. Try it on your live account. Don't over leverage. Use your trading journal and you see the wonder that's going to happen in your life. All you need is just confidence. That's all. You see how price is respecting this. You see how price closed above this pivot level. You can just see it here. Price just closed above it. Let me draw the second one. Can you admit people? JC, people are waiting in the waiting room. Please, can you admit people? I can see them type on the chat box, on the WhatsApp group, sorry. So please, can you help me admit them? They are waiting. Okay, so this is our 200 EMA. I'm going to 5 minutes and see how price reacts to this. Please, can you admit people? Thank you. Now, this trade has already started. If you missed this trade here, you also missed it here. This is all indication that what, as soon as price is opening, what's going to happen? Price is coming here. One, this is our pivot level that it broke. The 200 EMA is still showing that price is above it. So if market open, I'm still expecting price to do what? Go up. So this is about 20 something pips here for you to catch with what? Euro USD. So if you want your stop loss can be here. This one, or even if you put your stop loss down here, you're not still losing much. It's just 18 pips. 18 pips to get 20 something, which is, to me, is 1:1. But for this thing, price is coming up to this place to do what? Continue its movement upwards. So Euro USD, buy order for Euro USD. But like I said, when the market open, wait and see the reaction of the markets. Buy opportunity on Euro USD. This is a buy opportunity on Euro USD. But if market decides to drop down here, it doesn't break it, better option for you to do what? Buy it up to this place. So this is how simple. Just imagine you took this pair from here. Now this is a sell option. Let me show you a sell one. You know, this didn't get to this pivot level. But by the time this candle closes here and this one closes and you did an instant execution, from here to here is how many pips? Let's say enter from here. Let me do it well. This is 21 pips. Down to this place is how many pips? 29. So for you to get 21 pips, you can't tell me you will not secure your profit. You allow this thing, just remaining how many pips? 7 pips, and you allow it to go against you. So that's not going to be your fault. You know that. So like I said, when you're trading, you also need to do what? Add psychology to it too as well. So even if you're expecting price to drop to here and it didn't drop, for you to enter from here and get to all these pips, you will not just allow it to go like that. Like this one now is going to hit your stop loss. Let's say you saw this one. This closed above this closed above this, and you put your stop loss here. Price comes down, you drop, you hit your stop loss, but your stop loss will be very, very small. That is the most important thing with this. So if this one hits your stop loss and you decide to enter a sell here, you will cover up for all the, let's say you entered around this place. This is what? 21.13, and your stop loss is here. 21.10. That's 3 pips. So you're building yourself and you're becoming a professional. A professional trader is not the one that go in, is a trader that is winning consistently. So even if you fail, if you have some losses, maybe in a scale of 1 to 10, you lost 4 and you won 6, or you lost 6 and you won 3. That 3 will cover up for the whole 6 that you lost. Like in the company that I have an investment with, Omega Pro, they are so transparent that you will see their losses and their what? You will see their losses and their gain. The losses might be much, but by the time they make their profit, it will cover up for the losses that they have. Even if they have like 5 trades that went into loss, if they show you the winning trade, that is just 3. That 3 will cover up for that 5 that was in loss. That's what this strategy is doing for you. Just give me 1 minute. Okay, so we've gotten what we're expecting in Euro USD. There's a buy opportunity on Euro. Sorry about that. I was trying to reply a chat. There's a buy opportunity on Euro USD. So this is what I'm seeing and expecting here. If it drops, if this one comes down, I will expect it to break this pivot level before I can take a sell. But from all indication here, it's still going what? To the upward movement. So now this Euro GPP, this one, the diagram is already there, if I'm not mistaken. Let me see. We can still draw it. Let's just draw it to be on the safe side. 30 minutes. I hate all this, any pair, all these crosses. You can see how this thing is. You can't even pick a reasonable a reasonable impulse move. So I'm going to pick from here to this place. By the time you draw it on your 15 minutes, you see how. Let me pick this small one. It's not about trading everything. Just pick one pair, master that pair. That one pair can make you rich. You don't need all the pairs, just one. See this one, look at how the movement is. It's not even moving. Okay, we've gotten the impulse move. The main thing is just to get the impulse move. What is the impulse move? As soon as you get it, it's easy for you to do what? Draw the other ones and go with it. Okay, I don't want us to waste so much time on this. So I won't draw the up one. I'll just draw only the where price is currently. I said 5 pill. I think this is 6. Anyway, no problem. All right, this is coming down because of the 200 EMA. But let's see. Okay. Now see how beautiful this particular trade is. Imagine you saw this trade, you enter this trade here. This one closed here and this closed here. Your stop loss is, let me use this. Let me change this. This is where your stop loss will be. The candle that broke it, which is this. And your entry will be here. Let me change the color. Oh, let me change it again. So look at your entry. 0.87832. See your stop loss. 0.87892. That is how many pips? 9 minus 3, please. 9 minus 3 is 6, right? 6 pips to gain what? Please, if you've not gotten me a val gift, you better start looking for val gift for this strategy. 6 pips to gain how many? To gain what? 40 pips. So if this trade goes against you, even if you use one standard lot, what you're going to lose is $60. But if you go in your favor, you're going to gain what? $4,000. If you use 0.01, 6 cents, that's what you're going to lose. And you're going to gain what? $4. That is the beauty of this strategy. Now, this is 30 minutes. Let me go to 5 minutes. Sorry. It's even on 30 minutes, so you're even going to wait for long. Okay, now look at it here on 30 minutes. On 5 minutes, sorry. This is your entry. No, so now this is 5 minutes. Your stop loss is not even going to be there. See where your stop loss will be? Here. And your take profit and your entry will be here. Where's that pink? Now you see the difference. Your entry will be on this green candle here. Instant execution. Because it closed below the pivot. Remember, the pivot is the blue line. So how many pips now? Your entry is 87,850. Your take profit is 87,872. 7 minus 5, 2 pips to gain 40 what? $40. 40 pips. It's just for you to practice. If you do this and get it once, you don't need to keep entering the trade again. You are losing 2 pips. So if you choose to risk, maybe you have $500 and you say, if I lose 2 pips, if I use one standard lot, I'm going to lose $20. Abi? One standard will lose, 2 pips for one standard is $20, if I'm not mistaken. Those who know mathematics, am I correct? 2 pips on one standard lot is what? Yeah, I've changed it to 5 minutes here. Thank you, K2. 2 pips. Let me see your answer on the chart. 2 pips for one standard lot. You know, one standard is $10 per pips. So 2 pips for one standard lot is 20 pips. So imagine you saw this setup and you have a $500 account. And you said, let me risk it. Let me do longer truth. And use one standard. And your stop loss is 2 pips. And your take profit is 40 pips. 10 times 40. Good. So now you are going to lose, you are willing to lose $20 to gain what? 40 pips using one standard is how much? 40 times 10 is what? 400, right? So you're losing what? $20. If it goes against you, you lose $20. If it goes in your favor, you gain what? $400. So for that trade now, you've grown your $500 to over 100% just from one single trade. Just from one single trade. Now that's the beauty of Forex. Your risks. If I'm risking this trade, if I choose now you're not going to, that is not over leveraging because your entry just won. If you choose to use one standard with this strategy, or you're risking 2 pips to gain 40 pips, you're not over leveraging because what you're going to lose is $20 to gain 400. That's the beauty of the risk to reward that this strategy is giving to you. So we've gotten this. Now let me delete this so we won't have to. Now here price did what? Closed above our what? Pivot level. So what's going to happen when market open? 2 things is going to happen. If the next price that's going to, if the candle open, 11 o'clock market open and price is still respecting this pivot level, what you're going to do is buy, but let your buy be what? Your first take profit to be here, somewhere around here. Then your second take profit to be here, somewhere around what? Here. Let the first take profit be here because price is below your 200 EMA. Then your stop loss will just be what? On the pivot level or below the pivot level. That is only if price, market open and price closes above this pivot level of 87,403. So let me write it down. Buy opportunity. Euro GPP. If price closes above 0.87405, TP1 should be 0.87600, 0.87600, If you can still hear me, please type 5, because my internet just gave me a warning now. There's a condition on this trade. If price closes above this pivot level here, this is only when you can buy. But if price doesn't close above it, if price closes below it, do not buy. If the market open and price does something like this, oh, sorry. If the market open and price does something like this, closes here, wait for it to next one to close, then you do what? You sell. You have to do what? Duplicate this box and paste it down here, so you can know where your next TP is. Okay, but if it doesn't happen like this, this is what you should do when price, as market opens today. Watch out for price to do this, then you do what? Okay, good, you can hear me. So this is what I have for Euro GBP. There's a condition. If price does what? Closes above this. So I want you to take notes before you can buy this pair. But if it doesn't, then you duplicate your box, place it down, draw it so you can know where your next TP will be. That's for Euro GBP. Now USD card. My chat is blinking. Cyril, thanks for the session. Please explain the best way to maximize the strategy by securing your profits. Before I answer this question, do you know how to secure your profit? Do you know what securing of profits means when I said this thing? Okay, do you know how to move your stop loss to stop profit? That's Cyril. Yes, if you know how to do that, then this is what happens. Let me go back. So let's assume you enter this trade here and you sold this pair and you're expecting it to come down here. From here to here is how many pips? Let's say your entry was here. From here to here is 40 pips. You calculate it, you've done 40 pips. You secure 10 pips. If price have gone 20 or 25 pips, secure 10 pips and wait for the next one to go. That means you move your stop loss from where it is. Either you move it to your entry price or you do what? You move 10 pips in profit and secure your profit. Or if you're not doing that, if you are well, you have full confidence that price is going to come and hit you on your take profit. If you leave it that way, fine. But it's always good to do what? Secure your profit. Because now this one, because this is not, if it's gold, this movement you see here is over 100 pips. But because this is a small pips, you might just as well leave it. But it's always good to do what? Secure your profit. If you are using big lot size, by the time it has moved 20 pips, you have $200. You cannot just leave $200 and leave it there to be lying low. You might secure like $50, secure $100 by changing your stop loss to what? Stop profits. Now, I didn't even write stop loss for this. Let me write stop loss for this. So if price closes above this, your stop loss should be what? Let me put your stop loss. Stop loss will be, that is if price closes above 874, your stop loss should be nothing less than 10 pips, 0.87300. 10 pips is okay. 10 pips stop loss to gain what? This first one, 20 pips, and the other one over 40 pips. So that's a good risk to reward ratio. Have I answered your question, Cyril, before I go to the next place? So Cyril, if you enter from here and price has moved down like this, you can secure to this place, move your stop loss to this entry here, then the rest will come down on its own. Okay, good. Now let me go to USD card. $30 minutes. Zoom out today. So it's very easy. Let's use this impulse move. This one from here to here. Okay, this looks good. Pick your rectangle. Always make sure you find your what? Support zone and your what? Resistance zone. Pick your trend line. The intersection. My chart is blinking. Sorry, who's that? Okay. Amen. Thank you, Victor. The same thing here. You draw. I prefer. You know why I don't want to draw the upper one, because price is below. Is on the next. Is on the other half of the box, so of rectangular box. So no need for me to draw up. You can do that yourself. Just what I'm doing. So we won't have to waste so much time on this, because we have 2 more pairs to go. Okay, so intersection here. You see how price respected that place. I've not drawn this, but just putting the intersection, you see how price came, the present candle. See the way it just respected that area. 200 EMA, what's it telling us? Okay, it's coming down. Reset our charts. Are you seeing it? Structure is very beautiful when it comes to trading. It respects it a lot. It respects it a lot. So this is 5 minutes. Now we've come to 5 minutes. So this is telling us here that price is what? Coming up based on the strategy. The next candle that is going to form by 11 o'clock, 1 hour time from now, that is going to form. If it closes above this pivot level, please. If it closes above it, that's the next 5 minutes candle. As soon as it closes above it, do what? Enter a what? Buy. Your first TP will be here. Let me change the color. The first TP will be here. The next TP will be this one. And your stop loss will be what? Here. The candle that broke it, this one. But just wait for what? Let the other candle close above it. Then you'll be certain that, okay, yes. So even if it comes to hit you, what are you risking? We can't know what you're risking now until the next candle forms. So I don't know that it will form and come up here or what. But this is where your stop loss is going to be. So based on this strategy, what happens here? Price is doing what? Coming up. Why I put our first TP here is because 200 EMA tells us what is happening. If price is below the 200 EMA, is coming on a downward trend. But that doesn't mean that price cannot come up, break the 200 EMA and keep going. Do you understand? Price can do that. Just like what happened here. Now you can see price bounced off from this 200 EMA and started going up. It did not get to the next pivot level. It came down here, broke this 200 EMA and came down. So there's a tendency that it might do the same thing here, break through this 200 EMA and keep going up. So for this particular strategy and this particular setup that is showing us here, if the next 5 minutes candle closes above our pivot level, which is this purple line. We're buying here, this first one here, and the second one should be here. So if your TP1 hits, you just move your next stop, your stop loss, the next entry to the entry point. So you're not losing anything. So buy opportunity is setup. If the next 5 minutes candle closes line, my chart is blinking. If the next candle closes below, you wait. If the next, okay, I'm going to talk about that. Thank you for that, Cyril. If the next candle closes below, you have to sell. You wait for the next one to close again. Like this one that closed here did not close below our pivot level. Let me delete this. That's a beautiful one. We're going to come to that. This next candle now did not close below it, so we're not going to use it. So if the next 5 minutes candle closes below this pivot level, you wait for another 5 minutes candle to close. So now what you're going to have is this. Sorry, I'm trying to draw a candle. This one closes above it. You wait for another one to do what? Close like this. Below it, then you do what? You sell. But if it doesn't do like that, don't sell. If it doesn't close below this, don't sell. Then your stop loss will be what? The candle that broke it. You know, there will definitely be a candle. This one can be the candle that might break it because it's here now. Let me delete this so I'll draw it well. Don't mind my drawing. Let's say this market open and the candle did like this. Bearish and it closed here. This one now did like this. This is bearish and it closed here. So your entry will be on the next one. This one that broke the candle. Your entry will be on the next, after this one has closed, the next candle that is forming, you just enter your instant execution. Your stop loss will be the one that broke the pivot level, which is here, 1.26900. I'm just using this as an example, but this is only if the candle that forms breaks and closes below the pivots. That's why I said if the next 5 minutes candle closes above your pivot line, this, you buy to what? This place that I want to show you now. Buy to 1.27100. And your stop loss will be what? 1.26850. 1.26850. But if price closes below, wait for another candle to close below to confirm your sell opportunity. Sell. I'm sure you can understand this, right? Okay. I'm sure everybody understood this. So this was going to happen. If the next candle closes, you buy to this extent. Buy here because price is what? On below our 200 EMA. So we always need to respect it because that 200 EMA acts as support and also acts as what? Resistance. But if it breaks it and all that, you can do two entry, first TP here, second TP here. But always on the safe side to do what? Just put your TP here and enjoy yourself. So we're clear on this. This is my analysis for USD card. And let's go to silver. What does silver have for us? And has already given us a good impulse move from here to here. You see why I prefer to trade all these metals. If they are going up, they are going up. If they are coming down, they are coming down. If they are consolidating, they are consolidating. Not the one that will consolidate for 1 year, still consolidating, just moving one place. Those crosses and those other pairs that are not USD related, they can be so frustrating. They can frustrate the life out of you. Okay. I just need to find my pivot level. Very important. And the beauty about this thing is if you draw it, since price is still within, are you seeing how price is respecting this thing? This gift I gave you people for free. I hope this will make me to go to heaven, because this is mind-blowing. I know people in that group, they are just silent students. They are not talking. But if you know the amount of money they are making from this strategy, I can't even measure their names, so they will not kidnap them. People are making money. Silent students. They just come to my DM and they will show me their results on live account. Oh. They don't talk, they don't chat. They will just come for Zoom meetings or go for the recording, watch it, and that's all. And they'll start doing wonders. What's the 200 telling us? Okay, bye. Now you see the reason why I say always make your TP. If the price is like now, you see, if you want to sell this pair now, because the price is above the 200 EMA, you cannot be anticipating to put your stop loss on the next pivot level, your take profit on the next pivot level. You put your here at the tip or somewhere around the 200 EMA in case price bounces off, just like what you're seeing here. Hey, make me host back. Make me host so I can continue. Just you can make me host if your system wants to go off. He said you will make heaven. Have you done that? All right. Sorry about your system. So I have to be admitting people. Okay. So you can see why I said what I did in USD card to make this place our first TP is just because of scenarios like this. You can see how this one came around the 200 EMA and bounced off. So with this place now, we're not going to do anything because we've priced the next candle has not closed. So if the next candle closes below, then you can sell. Your stop loss would be this candle here. This bearish candle. You know, it's wicked out here. Your stop loss should be here. That is only if the next 5 minutes candle closes below the pivot level. But if it doesn't, wait. If it breaks above this pivot level, wait for the next 5 minutes candle to close. If you close above it, you buy. So this is what you should expect. Close above it like this, you do what you buy. But if it doesn't, if it closes below something like this, the next one closes before, you sell. Your stop loss should be here. Your first TP should be here. Your second TP should be down here. It's always good to do what? Be on the safe side. That is for, sorry, this is 30 minutes. Let's go to 5 minutes and see what happens. So sorry. Let me delete this. Sorry. I was analyzing that in on 30 minutes. Okay. Beautiful. This is a beautiful one here. Now you see, let's for instance now we took a sell. Let's say this candle closed and this one closed below. We took a sell somewhere around here. You know, this is where our take profit to be. Here at the tip of this place, just where we are. Just like what I did with Euro GPP. You see it? Now come to, sorry, USD card. Now look at this one. If I told you, if you put your take profit on this pivot level, what will happen to you? Price will come here and bounce back off. So to always be on the safe side, that's why the 200 EMA is there to tell you what's happening. Since price is above the 200 EMA, there's an indication that price may continue going upward, even though it obeys even if it obeys the rules that is it closes below the pivot level. But to be on the safe side, let your first TP be on the body of the what? 200 EMA, just like what you're seeing here. So imagine that we enter the sell from here after this candle that broke it and this one that closed. We decided to enter a sell at the close of this. So look, I don't know, you see, 226 pips. 226 pips, that's what you're going to get. And what is going to be your stop loss? Just here. Just above here. Let me use, look at the risks. Here, let me change it to red. Your stop loss is this candle here, and your take profit to be here. Have you seen it? First take profit here. So even if you have two positions, your first take profit has hit, like you have it here. The second one, that means you've moved your stop loss to what? Either break even somewhere here, break even to the entry, or you move it to secure your profit. Even if it goes back, like as it does now, it will hit you on your stop profit, then you have nothing to lose. You made money. But if you decide to just enter one trade because of the 200 EMA, you want to be on the safe side, let me enter, let it hit it and I go home. If you hit it, you've closed for the day. Then you watch what price will do. So that's the beauty of the 200 EMA, to direct you on what to do, not just to enter the trade and do that. Now, this is what happened here. Price got here and is reacting to it. So two things will happen when market open. It's either it drops again back to this place, break it and keep going down, or market does what? Break above it. You wait for it to close here before you do what? You pick a buy. So this, we didn't have to wait and see what the market is doing. Though it's showing us sell indication because the two candles closes below our pivot level. But that was for last week. We have to wait for what's going to happen this week to see if market is going to sell or the market is going to do what? Buy. So here, the answer is wait for further confirmation. Though price indicates a sell, wait for 2M5 candles. Wait for the next. Close below pivot. If price closes below it, the next candle, that's when you indicate your sell. But if it doesn't, you look for a buy opportunity. And my baby boy, I don't even need to talk. This was what I called last week. When this one closed like this, I said sell, and immediately went to hit our stop loss. So we're here. And immediately close above it. Was it here or here? I think it was somewhere around here. I think it was somewhere around here also. It hit our stop loss though for sell. Then I said it has shown an indication for buy. Those who bought it here, they hit their take profits immediately with a stop loss of this and a take profit of that. So how many pips stop loss? Entry was somewhere around here. 1817. Stop loss was what? 1815, 20 pips. Take profit is what? 1830, over 200 pips. Please show some love on the chat box. Types 555 or 777. Show some love for this strategy. This strategy is mind-blowing. Please show some love. The strategy is mind-blowing. If you can use it for only gold, just go home and sleep. You are good to go. You are good to what? Go. So even if you use a standard lot for this gold now, what are you going to get? You lose $20 to get what? $200. Never in my life have I seen this. Even myself, it shocked me. Good, our lover. Yes, sir. Thank you. All right. So now, looking at this thing, we're still looking for this boy to keep buying up here. Now, if you enter this trade for a buy, you are chasing it. You are chasing the market because you missed it here. Let me put the 20 EMA, 200 EMA. Aha. So now you see why I said if you decide to sell, let's say this thing happened. You said you bought it to this place and you want to sell it to this zone. See where your TP will be on the tip of the 200 EMA. As soon as it hit the 200 EMA, even if the second one decides to come, but did not touch it, you've already hit take profit, first one, and secure second one. If it goes up, it will hit your stop profit. You do not lose anything. So please always put your 200 EMA. Thank you, Basi. Always put your 200 EMA to check in case price is above it. Price is above your 200 EMA and you want to sell. Make sure that your first TP or your TP for that day should be at the body of the 200 EMA. Instead of going to the next pivot. So you know that you'll be on the safe side. I think we've done justice to this. So if market open, this is what's going to happen up here. If it drops here, it must surely respect this 200 EMA. If you respect it, it will go up. If it doesn't respect it, if it breaks it, it will come back down here. Better for you. If it comes down here and it closes above this, is a better opportunity for you to buy up. But if it doesn't, this market is still going up to 30, to 1830. That's where the market is going. 1830. It's going up because 200 EMA is below price. It's still giving bullish momentum. So price is going up here. Why I said it's not good to chase it. You will not know where to put your stop loss. Because if you choose to buy this thing as market open now, where will you put your stop loss? You start thinking, oh, let me do 50. Let me do this. Price will go back. But here, if you follow the rules, if you enter the sell here, this is where your stop loss will be at this week here. Or you can even put it on the pivot line or the week there. You know that, yes, I know where I'm putting my sell to get something. But now here, if you enter a buy, you don't know where to put your stop loss. You'll be confused. You might decide to now go and put SS stop loss. That's 40 pips. You lose so much. So it's not good to chase trade. Wait for the market to present an opportunity to you. Then you enter it. Any question? I'm done for today. This one we have to wait for confirmation before we enter this. Type on the chat box. If you have any question, type on the chat box. Any question? So clear. Let's crush the wick. Okay. So you won't have any problem again, Abi. Parkinson. Okay. Yeah, no problem. Good. Toby said, no question. All right.